look at the data, according to our analyst at SPGCI, if you just look at crude, 2.7 million barrels a day of crude goes into Europe on a normal day prior to the war, 1.5 million barrels of products. And this is explaining why you have these elevated commodity prices at the moment, especially in fuels. You see it on forecourts, you see it in diesel prices. It's very hard to replace. And the key thing here is the grade of crude that needs to be replaced. These are medium sour barrels, Urals, that normally come into Europe. There's not a lot of that medium sour oil around. It can only really come from the Middle East at the moment. And of course, that's in a very competitive market, and Europe is going to have to compete against Asian buyers for that crude if they go ahead with these sanctions.
Well, the irony is that we're seeing the rally here, even in spite of the fact that we don't have a deal in this sanctions package to embargo oil from Russia. If we get a whiff of a deal being possible as a result of the 2 days of meetings that we're about to head into, what does that then mean for where WTI is likely to trade?
Our expectation at SPGCI is for oil to trade between $100 and $110 a barrel. That's dated Brent this year, but it's going to be a very volatile market in these circumstances, and there's lots of risk for the upside. I think you've got to look at OPEC. You've got the OPEC meeting coming up this week. OPEC's compliance is 220% in April, according to our estimates. OPEC's struggling to meet its quotas. Where this oil comes from to replace these Russian barrels is very difficult to see at the moment. There's going to be a lot of competition for Saudi OSPs coming into Europe. There's going to be a lot of competition for Basra Medium coming into Europe. But again, now you have China coming out of COVID lockdowns, then that pull for those medium sour barrels into Asia is going to come back into the market. That adds to the upside for crude at the moment. So it's very tight. The only alternative, really, if you look at the spectrum of grades that are really compatible with the European refineries, is Iranian oil, and Iran still under sanctions.
Andy, you talk about European nations competing with Asia should they have to turn to the Middle East for more of their energy supply moving forward. What about competition within the EU? How is pricing likely to evolve, and what kind of mechanisms may come into effect that will help European nations secure as favorable a pricing as they can for energy?
Well, there aren't really any mechanisms. I mean, the mechanism is the market, and Europe's going to find that it's competing in a global market, and those sellers, with their official selling prices, they will, ship that oil to the highest bidder ultimately. Again, more risk to the upside. A key thing here that really isn't being talked about enough is China coming out with COVID lockdowns. That's weighed very much on sentiment in the oil market and offset some of this concern around Russia in the last few weeks. That's now going to change. You add into that the EU sanctions debate, which we might see some resolutions to today. It's an awful lot of medium sour grade crude that Europe has to find to displace these barrels, these Russian barrels, even if they exclude supplies from Druzhba. Druzhba supplies about 1 million barrels a day into Europe. That oil is going to have to come from somewhere. The only countries that really have that grade of crude in significant volumes, it's the Middle East, and increasingly we see that trade flow heading into Asia.
Andy, can I ask you about Russian gas? Because Jeff just came back from Davos last week and highlighted this interesting letter that George Soros sent to Mario Draghi, Italy's prime minister, in it saying that effectively Russia is blackmailing Europe. But specifically, George Soros says that Russia's gas storage is almost full, and that effectively Putin's bargaining position is not as strong as he wants everybody to believe. Do you have any insight, any take on the gas storage situation in Russia?
We don't have any insight into the gas storage situation in Russia. What we do have some insight into is how a lot of the Russian energy infrastructure now is being put under strain by actually supplying its own military campaign in Ukraine. We did some analysis about a week ago looking at the refinery capacity in Russia, and about 6% of refinery capacity is taken up at the moment producing fuels for the Russian military. That's tanks, heavy armor. Russia's own internal infrastructure, if you extrapolate that out, is definitely under pressure. at the moment. And these displacements, they're going to put pressure on storage, they're going to put pressure on refineries, on processing plants. So, those rumors, are they believable? Data suggests that there's strain elsewhere in the Russian energy system.